What's up, everybody? All my beautiful people. Today, we're going over Coinbase trading again. And basically, just gonna go over some news from this morning with JP Morgan and Coinbase. Kind of go over some targets for the future. I've got to black this out because you guys can't see my real trading strategy. That shit's goated. I've worked 5 years for it. Some of you can pay a pretty penny for it, though. Just letting you know. We'll go clean chart, bang, boom, booze. I am not going to show you that one. We'll show you a different one. Yeah. I'll show you this one. Alright, gang. Let's get you back in the fold here. Alright. So, JP Morgan just announced that they are partnering with Coinbase. Now, what does that mean? I mean, ultimately they were probably already doing business together, but now it means that Coinbase is probably getting their sole business, and the Coinbase exchanges will have a lot more volume on their charts. When I started trading these about a week ago when they opened, these were averaging like 75 to 100 million volume on ETH and like 50 to 60 million volume on BTC. So the more that grows, I would imagine this exchange price lines up with the real price. I feel like I've noticed it's been lining up a little bit more. It's still like $5-10 off. I did notice one thing. After market close, they start wicking. So for like 2 hours after market close on Coinbase, do not use their system generated stop loss report, like this stuff, the 1% base, because it's typically like 30 points away from where you're at, and like price will move 20 points and then Coinbase will just wick you like down or up 20 points that doesn't exist on the real chart, but they'll take out your stop loss. So just be careful there. I haven't experienced that during the market hours though, so it's not that bad. Probably shouldn't be trading in those weird hours anyway, so it's not the worst thing in the world. JP Morgan and Coinbase announced a strategic partnership that sets a new standard for customer choice and security in the innovation economy. This collaboration introduces features designed to enhance access and optionality for mutual investors. Yeah, so basically 5 years ago, when it was sort of the wild, wild west of crypto, there were a ton of exchanges. There were a bunch based in not South Korea, Taiwan. Singapore had some really good ones, and Mexico had some good ones. And they had really clean UIs. They were all actually decentralized, and on-chain. So you could send from your exchange to like OpenSea. It was fire. You didn't have to wait for any daily verification transfers or any centralized mumbo jumbo. And it was perfect. Too perfect. You know, the tiny hats don't like that. So they took that away, and for like 3 years there was nothing. You couldn't do anything. You could buy and hold crypto. That was it. Super lame, not very American at all. But now they brought it back under the microscope of a nice little goy beam. So But I'll take it. It's better than options, I think. I don't like dealing with premiums is kind of annoying, but I think in the future they're going to just take all this stuff and give it a 24-hour on chain and just make it like perp charts like this, and Tesla perp, Nvidia perp, all that. That makes sense. They said they've been making plans to like turn this into a 24-hour market, and I don't really see how that would really work with options. So, but most of the market trades futures. Yeah, that's more of it anyway. Not most, but it's like 50, 30, 30, 30. But definitely cool. I think so anyway. The ability to not have to deal with the PDT rule and just trade as much as you want is awesome. So yesterday I fucked up overnight. I lost 2 trades. That's why I'm down a little bit. But yesterday I was at like 850 and ran it up to 1250. Now we're down here. It's just gotta let your positive variance take hold. But that's the point I'm getting to, is I really like the ability to do this. Like if options just remove the pattern dictator rule, like if they just got rid of that completely, I would probably still trade options, just because 0 DTE volatility is kind of insane. And you can probably scalp out more moves in a shorter time frame. But that's only because they don't let you go higher than 10x leverage on here. That was also another thing those old exchanges let you do. You could jack up to 100x leverage, just do small unit sizes. They go under the claim that too many people were losing your money. I would argue that's their right. If you don't want to learn how to actually do proper position sizing and lose everything, that's your deal. Y'all feel? That's what I think. So, long story short, we're gonna go over some targets here. Boom, 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 boom. Get the fib out. Get the Fibonacci out here. Perfect. Okay. Obviously I'm in long, so I kind of wanted to break above this, but there's a pennant here. The way I'm looking at it is less so like that and more so like these. Some weird little wicks. I wish I would have seen this a couple days ago, but hindsight is 2020. Maybe it chops around here for the rest of the day, but I'm expecting this John to fucking go ka-jinger. I would say this level is going to get swept, and then we're gonna do some price discovery and ideally use this 0.5 to 0.618 as a consolidation zone. There is an argument you could say price just chugs on down here, falls down here. Totally could do that, but gotta believe in something, right? So I choose to higher. And then when it gets a little bloodier, like 4,800, I would want to see a 4,800 dump to 3K. That's the crypto I know. I'm also biased, so take that with a grain of salt. Have a good one.